Hello everyone, how are you today? It's Kay. So this video is about my exit strategy. Exit strategy of KTS, K's trading strategy. So I hope you can learn something new in this video about the way how I exit the trades. So before getting into the topic, let me quickly a disclaimer is that this information in this YouTube channel is basically based on my own experience knowledge. So when you take trades, please do at your own risks. Also, please be careful on the spams and scammers out there in social media. So so today's topic is about the exit timing. And I think exit timing is very important, even more important than the entry timings, because exit timing is technically connected to the risk management. And also, it's also connected closely with psychology. Like when you enter trades, you don't really feel psychology. You don't feel emotion, maybe because you have hope. But when you exit, especially when you exit with a loss, then you might feel stress. You might be having some frustration. Especially these exit with the losses happens not only once, but twice, 3 times and more, then you might get more emotional and you might want to do some revenge trades afterwards. So this exit strategy should be rigid and it should be logical. Yeah, never exit with emotion. You have to exit with the logics behind and also reasons behind. So let me switch screen to the slide. Okay, so again, today's topic, this is 23rd of Tuesday, which I'm posting this video, and it's about, again, exit strategy of mine. So this is a video series of my strategy KTS, and you can actually find and download this PDF for free from my website. So please access on below link and below link on the description on this YouTube, and please download the PDF for free. So today's topic is about exit strategy again. So there are two situations of exit. One is, as it says in slide here, one is exit timing before placing the break-even line. That means, so let's say the market goes up. So let's say in this scenario, let me just zoom in. In this chart, you buy here, you enter buy, and the market goes up initially, and then you exit right over here. So in this case, the market is up, market was up trending, but afterwards it didn't break higher, but it was in sideways, and then the market went a bit bearish. And this is where you exit before you set the break-even line, because break-even line should be set after you saw the breakout. Let's say in this case, when you see the breakout of the resistance like this clearly, or even the breakout of the long wick over here, if you see the close, candlestick close becomes above that wick, then or the wick or the resistances, then that will be the perfect timing to set the break-even line. So I will talk about the break-even line on the next video, which will be uploaded this Friday. But just for now, let me talk about the exit strategy. So in this case, I would exit here. Well, actually, this is one of my exit confirmations, because if you look down below here, there was a dead cross in stochastics. So as I mentioned in entry strategy, I use these tools. These tools to identify a trading edge, where to buy, where to enter trades, where to sell. And I use at least 3 confirmations among all these. So I don't take simply gold cross to buy. If I see gold cross plus, let's say, engulfing breakout or doji breakout, and plus, let's say, Tokyo box breakout, or Fibonacci bounce, or Bollinger bands, band walking, then I take entry. So anyways, I look for 3 entry confirmations among these confirmations. And in this example, I took the gold cross as one of the entry confirmations. So this is just example. I will also share my trades after I talk about this talk about this idea in general. But just for now, just know that the when you took the gold cross to buy, for example, in stochastics, then that cross should be one of your confirmations to exit. Right? So this is one of the exit confirmations, but you don't exit technically. You don't exit, simply you see that cross because it may go up. If higher time frame, let's say 4 hour or daily, are still going up, then the market may break resistance. So you don't exit yet. And then the market went up, and then it broke. So here technically you can set the break even. But let's say you couldn't monitor the chart, and let's say your stop loss was still here, down below. You couldn't get this breakout, and then the market went down afterwards. And then here you see that this is the second exit signal because it broke the supports. There were 1, 2, and 3 supports. There was a minor, very small candlestick support. So there was a 3 support breakout against major direction. So major direction was bullish. This was against major direction. You saw earlier there was a dead cross. Plus there was a dead cross here too. Just before the support level breakout, there was a dead cross also. And then there is a breakout of the support. And this wasn't technically like a double top or head and shoulders, but this was basically the support level breakout. So when you see this, you have to exit here. Because as I mentioned, and the market reverse starts from the lower time frames. But market tends to follow higher time frame directions. So that means if daily is bullish, then this is M5. M5 should mark consecutive bullish in the waves. So it should go up continuously like this. In this case, it went up N wave up to here. But then it went down, reverse in the wave, and broke the support. So this is a change in the market, and you have to really be able to identify the change here and the breakout in the market, because in the 5-minute, it has been bullish, but this is a trigger that the market is no more bullish trend in the 5. But 4 hour may be bullish still. 4 hour or daily chart, daily time frames may be bullish still, but if you see reverse in the 5, that's when you should exit. Because again, the trend starts from the lower time frames. So if 5-minute becomes reverse in the wave, breaks the supports, then it may become another reverse in the wave. And then 1 hour eventually becomes flat in range and down. And then daily chart also becomes flat to down if 5-minute continuously goes down from here. So that's the idea of exit timing in my strategy. So anyways, when you enter the trade, and if the market doesn't go towards your direction until you set the break-even line, then you better exit with some profit or even loss. So that's one of the exit timings, and that is before placing the break-even line. So the other exit timing is here on the next slide. That's exit timing after running profit. So in this example, let's say you bought the market here when I place buy. Let me see. Yeah, let's say you bought the buy here. This is H for 4-hour time frame. And you bought the buy, you set the break even, or you may set the break even at here maybe, and you just keep going up, and you just keep following uptrend. And then you see where the market goes flat. 4-hour became flat here. And this is when you look for and take profit time to exit with a take profit. because you bought the price, you bought the market here, and when Kijun Sen went flat, this was also one of the exit timings. This is where you have to exit with profit, because after you see Kijun Sen flat, that means the market may reverse back to Kijun Sen. In this case, it did actually. It went reverse in the wave in the 4 hour, and the market went back to Kijun Sen. This is actually about ichimoku nature. When Kijun Sen and Kumo are pointing up, then most likely the market goes up continuously because buyers dominate in the long term to mid term. But when Kijun Sen goes flat and Kumo goes flat also, actually Kumo Senko span A is flat, Senko span B is also flat. Yeah. So when you see Kumo flat, Kijun Sen flat, that means buyers and sellers are 50-50 level in this 4 hour time frame. And as ichimoku nature, the market needs to consolidate or retrace. And it may retrace back to Kijun Sen is the idea. Not always. Kijun Sen, after Kijun Sen goes flat, the market may go up also still. But whenever you see Kijun Sen flat, Kumo flat, that's when you look for an exit timing. And I do this in the 5 minute. And I will show these practical examples based on my entries. So let me show you the first example, exit timing before placing the break-even line. I took the trade this week on USDJPY. So let me show it to you right now. Just hold on. Let me get the Discord and pull up the chart. I take all the screenshots for my entries and exits. So hold on, let me just look for it. Oh, here we go. Okay, so yeah, let's see. Let me back to that screenshot. Okay, so this is where I entered the trade. On this is USDJPY. I took this trade on the 19th of August. So technically here, I saw this. There was a. So again, in the for my entries, I take one of 3 of these confirmations, 3 or more of these confirmations. And in this particular trade on this USDJPY, which I took on the 19th of August at 7:55 a.m. UTC time zone, I saw the 4 hour. This is a 4 hour time frame was bullish. You see Kumo's up, Kijun Sen is up, Tenkan Sen is also up in this case, and Chikou span above candles. And as a confirmation part, I take 1 hour. So if you still didn't check the video about the confirmation, please do, because I take these are 3 categories on these time frames. So in that example, I took the 4 hour up trend by Kumo Kijun Sen angles, and then I broke it down to the 1 hour up by Kumo Kijun Sen and took my entry on the M5. So please remember this step in my strategy. So sorry, just wanted to follow up. So again, in this trade, I saw 4 hour was bullish, Kumo up, Kijun Sen up, and 1 hour was also bullish up, Kumo and Kijun Sen, and it has been breaking the resistances nicely, so I took the buy. So I took the buy here, and I took the stop loss of 37 pips. In terms of the confirmations, I took this first, there was a Fibonacci bounce. This was a 38.2%. 38.2% bounce on this bullish in the wave on the 5 minute. Again, this is a 5 minute. And so this bounce exactly on 38.2%. So this was one of the valid confirmation that the market is bullish in the 5 minute. However, again, I don't simply take this bounce only to enter trade. I also look for some other confirmations. In this case also, there was a counter trend line breakout. This was a counter trend line. when you draw the trend line, it goes like this usually. When it's bullish, you draw the trend line like this way, and you connect these lows and draw the trend line. This is a regular trend line, but counter trend line, you go backwards. You go backwards like this, and to expect the N wave to happen, breakout to happen. In this case, it already happened and marked N wave, new N wave. So that was counter trend line plus N wave confirmation, which I took also in the 5 minute. And also I took the band walking. So I used the Bollinger Bands. I use Bollinger Bands, and I use two Bollinger Bands. Again, the settings are, I use 20 period, and one with deviation 1, the other with deviation 2. So I have 2 bands. And when you see the market is in between deviation 1, 2, and keeps going up this way, this is called band walking. So I'm exactly talking about this part. The market has been up and in between deviations 1 and 2. So this is band walking, which I took also as entry confirmation. So just coming back to this slide. So in this case, I took counter trend line breakout and also Fibonacci bounce retracement. And also I took the, where is it? Counter trend line breakout, Fibonacci bounce. And also, let's see. Band expansion. This is, actually the other name is band walking expansion. I took the trade. So I took 3 confirmations, 1, 2, and 3 confirmations, and entered the trade. Okay. So I took that trade, and afterwards it went backwards. So this is the topic for today about exit timing. So I took the trade here. Exactly on this candlestick, I took the trade. And then afterwards, it went up slightly, but then it went down very sharply. My stop loss was placed here, 37 pips below. And the market went down all the way. So in that case, first exit confirmation was the 20 SMA breakout. When I see band walk, then 20 SMA breakout against major direction is one of my exit signals. So that's one. And then I saw this Fibonacci. I took the 38% bounce as the original confirmation. So this Fibonacci bounce, the yellow line, was exactly broken here. So I exited simply exactly here. So stop loss was here, and my exit was here. And I take 2% risk to stop loss. So this is about like 1.5% drawdown I took and exited. So this is one of the examples of my exit strategy, exit timings. So I don't exit simply because the market went down, simply because the market breaks the support. I simply look for exit timing based on what I took on the entries. So here you see dead cross, for example. You see stochastic dead cross, but when I enter the trade, I didn't take gold cross for my entry. So I don't take dead cross as reverse confirmation in this case. So again, I took band walking as entry, one of the entry confirmations, and the counter trend line breakout and Fibonacci bounce. So I was basically trusting this support, 38.2% support, which was 136.45. And once this support was broken, then I was thinking to exit. And then it happened, so I exited before the price hit the stop loss, so that you can keep the losses minimal and make sure you don't lose big every time you enter trades when the market goes backwards. So like this, my exits are logical and rational like this. And afterwards, whether the market goes up and down, I don't really care, because this was my rule, and we have to follow our rules to keep us from avoiding the big drawdowns. Because again, the trend happens from the lower time frames. So it was up, 4 hours was up, and 1 hour was also up when I took my entry here. But then what you see here is the 5 minute is going down. 5 minute went down, broke the 20 SMA, broke the support, broke this Fibonacci bounce. There was 2 supports, it broke. So that means the momentum has changed in the 5 minute. I was expecting the market goes up on the bullish wave and set the break even, but it didn't happen. But instead it went down, broke the supports in the 5 minute, and then it's pulling back here. But since it broke this key level, the market may continuously be bearish. And then 4 hour, if it goes down continuously, then 4 hour becomes flat, and the market may retrace all the way back to the 4 hour Kijun-sen as ichimoku nature. So it's always better to exit at the earliest timing possible, but logically, to have smallest drawdown along the way. So that's how I lose quickly and lose small along the way. Because even if you have some big profits in the future, if your losses are also big, you cannot cover these previous small losses in future profits. So our risk and reward ratio should be, much greater than 3. So your drawdowns have to be small so that future profits can cover relatively easier by having these small drawdowns, is my exit mindset. So that's one of the examples for my exit with a loss. Okay, so again, I took entry here and I exited here. That was my loss. Okay, and I lost almost like 1.4% drawdown. And this trade, I think I will also talk about it at this month's end, August, the end of August, when I review my trades every month. So yeah, that was one of my exit with a loss timing for this USDJPY trade on this month. I took on the 19th of August. Okay, so next example is how to take profit. So the next topic is about this one, exit timing after running profit. So this month, the market has been spiking, and I exited by hitting the break even, by hitting the stop losses with profit. So I didn't exit when 4 hour flat manually in the month of August. So I prepared an example in TradingView. So let me just switch to this one. So here, this is Euro Swiss franc, which was on the 22nd of August. So again, let me just do it from scratch by using this slide. Okay, so again, first, you check either daily or 4 hour. One of either daily or 4 hour is up. Okay, so in this case, let's see. This is again Euro Swiss franc, 22nd of August. Let me check the daily first. So daily time frame is going down nicely, and 4 hour time frame is going down nicely too. And when you compare the Kumo, daily Kumo looks much bigger than the 4 hour. So daily Kumo looks like this. It's getting thicker and longer. It's really nice downtrending. And then 4 hour Kumo is a bit smaller than the daily time frame. So in this case, I take the daily downtrend to follow, and I don't take the 4 hour. And then next one is the confirmation part. I check 1 hour and 30-minute time frames exactly in the same manner and see which one is trending down along with the daily time frame. So let me switch to 1 hour. So here's 1 hour time frame. Kumo Senko span AB down, Kijun Sen is down because of that breakout of the support. So, and if you can remember the shape of the Kumo, it looks like this in 1 hour. And 30-minute Kumo looks like this. So in this case, these are identical. So you can take either. If you see these identical, then you can take the 1 hour, for example. So in this case, I take the daily down and 1 hour down as a confirmation, and then look for entry based on the 5-minute. So I go down to the 5-minute. In the 5-minute, I don't use ichimoku kinko hyo anymore. I used to use, but not anymore because ichimoku kinko hyo is a bit lagging, I found. So I start to use other tools besides ichimoku. So let's say you are here. You check charts, and in the 5-minute, you happen to see this. In this case, there are multiple confirmations. So let me just zoom in. In this case, let's see. So again, I take these confirmations, and I take 3 or more confirmations out of this list. So in this example, there was a dead cross on stochastics, still valid dead cross, and also band walking. Again, band walking happens when the market goes between deviation 1 and 2. I got this question on the comment on YouTube, so I just want to remind again. Band walking means the market goes along with the major direction in between the deviation 1 and 2. So this is band walking. This is actually below deviation 2, but still you can count this as a band walk. And plus, there is one more confirmation. Actually, there is an inside bar here. If you look at this blue bearish candlestick over here, and high and low are engulfing, including 2 future candles, and this one over here broke. So this was the breakout candlestick that you can trust the market goes down afterwards. So technically, you can enter here, or in this case, since the market is close to the supports, right? There was support level here, so I wait for the market close below the engulfing, not below the supports, because higher time frame is going down. So I expect the market breaks support in this case. So this is where I enter the trade before it breaks. But in terms of the engulfing breakout, I make sure that the close becomes below the engulfing support. And in this case, it did. It closed below. So on the next candlestick, I enter sell. So again, I take the engulfing breakout and band walking and stochastic dead cross confirmations. Also, you can take this descending trend line bounce. There are multiple bounces here. So this is also another additional confirmation. There was also the pin bar here. Pin bar reverse was happening exactly on this bearish candlestick. So when I see this setup where every time doji happens on this downtrend, it has been breaking bearish. Pin bar broke bearish also, and the market has been resisted by the descending trend line. And finally, there was a dead cross band walking, and engulfing breakout just happened, where when daily and 1 hour went downwards, exactly here. So by these confirmations, I enter sell from here. So let's say I took sell here. My stop loss is going to be above the resistance over here. And see how it goes. I know it goes down because I already see that, but this time I just wanted to explain about how I exit with a profit where higher time frame goes flat. So that's why I picked up this example. So let's say here the market goes down up eventually, and there's a pullback, but still keep holding because higher time frame, daily time frame is still going down. No reason to exit. We just keep holding. Expect the next reverse in the wave. And the reverse in the wave just happened. Reverse in the wave means the new support breakout is a reverse in the wave. So when I see this, I move the stop loss to break even. This, and then just leave chart for a couple of hours. So here I set the break even. This is about time efficiency. But I set the break even here, and most likely I leave chart for 3 or 4 hours. Let's say after 4 hours, what happens in the market will be, so I took the sell here at 7.55. So 4 hours would be 12. Yeah, I would say, sorry, 11.55 or 12, let's see. I come back to 12 clock. So the whole time I simply leave chart. If the market goes back and take the break even, that's fine because I don't exit. I don't lose any money. So this is about the break even or win game. So I can just relax and do something else. Okay, so I just run the chart until the 12. Okay, looks like it almost touched, but looks like still below. So let's see here. Still daily time frame is down because this is still within the day. So daily time frame is still downtrending. So no reason to exit. I still expect the market break support. I just keep holding. And let's say I come back here. Okay, here I come back. And okay, I found there was a new breakout of the support. So I move one of the stop losses above the beginning of this I wave. So I usually take 2 trades, 2 positions. So I have one more stop loss, which I will keep it at the break even. So I trail the profit here. I fixed, let's see how many pips. I fixed 12 pips and still keep following down because it's still downtrending. Again, I'm following the daily time frame. So daily shows down, so I don't exit. Again, I only look for exit timing when Kijun Sen and Kumo go flat, which I explained about this slide. When Kumo goes flat, Kijun Sen goes flat, I look for an exit timing. But still it's down, so I don't exit yet manually. I keep holding because it's downtrending still, as per Ichimoku and KTS. So let's see if it goes down furthermore. Okay, so again, once I manage a stop loss like this, I also leave chart for 3 or 4 days, 3 or 4 hours, sorry. Sometimes I leave the chart for a day because when I'm busy, I simply leave chart after I set the break even. I almost forget about my positions after setting the break even because I don't lose technically. So let's say I come back at 3 hours later, which is 3 p.m. UTC. So let me just run the chart until then. Okay, so here I come back. Okay, so when I come back here, the market went up and then it hit one of my stop losses. So I take profit of 12 pips and the other one, I still keep it at the break-even line. Okay, so this is one of my exit timings. And so then the other one still keep at the break-even, but when I come back, I see this kind of a double top looking like. So, and I check the daily. And daily time frame is still pointing down because the candlestick hasn't closed yet. So daily is still showing down. So again, I continuously monitor and see if the market goes up to the break even or still goes down. most likely the market will go down because daily is still showing bearish. If the market hits a break even, that's fine, just take it. So let's see how it goes. This is 17, 18, 6 p.m., 7 p.m. still going. So let's say next timing I come back here around like 7 p.m. let's say, and then again a daily time frame still showing down. So I still keep holding the stop loss at the break even. But here I see there was a triple top. So I moved that stop loss above a triple top and fix, let's see, fix 10 pips of profit and still expect the market break support. And when it breaks support, then I move this stop loss to here and continuously trial. But let's say here, I come back to chart on the next market open. Let's see if it goes down or up. It kind of spikes towards the end of the market, usually. Okay, so now new market opens here. New market opens. So now let's check the daily time frame. So now daily time frame is still showing down. So in this case, I keep holding because it has been bearish, Kumo and Kijun Sen. So I will just run the chart a little bit more until I confirm it's flat. So let's see. Usually I wake up around 5 a.m. So around here, which is 5 or 6 a.m. I wake up. So let's say when I wake up in the morning, I keep holding, right? The trade, wake up in the morning, and then check the daily time frame. Daily is just still showing down. So I keep holding the 5 minute, but I can move the stop loss. I can trial the profit. So there was a double top. So in this case, I will move the stop loss to here above the double top. Actually, there were 3 resistances. So I move it to here and fix the profit of, let's see, here in this case, sorry, it was not. So I took the sell here, sorry. So I took profit of 21 pips and keep following downtrend. So let me just keep going. So it continuously breaks support. So it's continuously going down. Oh, but there's a big wick. So here, most likely I come back. So this was, I come back at 5, right? I check chart in the 5 minute, at 5 o'clock, and then come back at maybe, 9 a.m. again, or 10 a.m. even. So when I come back around here, I found my position got stopped out, and I take profit of 21 pips of profit. So the ending result was I took the profit of 10 pips and 21 pips on this trade. And if you look at the daily time frame, it's still showing down. So I look for to re-enter the market still by confirming 1 hour 30. If 1 hour 30 still goes down, then I look for the chance to enter sell again on this market. But looks like it's gone up so strongly, broke the resistances. So most likely I wait or pick some other pairs to trade, technically speaking. But this is how I leave chart and manage the stop losses. And in terms of exit with manually, let's say in this case I wasn't able to get this exit take profit with manually take profit timing. But let's say, let me just go back. we were here, and let's say the market went flat, daily went flat, let's say here, or 4 hour went flat, let's say, and then I look for an exit timing. But in this case, 5 minute is still showing bearish in the wave. So even if higher time frame goes flat, I don't exit. And then the market goes up. But since higher time frame, let's say H4 or daily is flat here, I monitor for exit timing. So then I see gold cross now, gold cross stochastics is happening, but I don't exit yet. It may be bearish anyway. So here, now this may become double top and goes bearish, or it keeps going up this way. So here I don't exit mainly, but I keep holding. I wait for 3 more candles to progress and see if I can exit with profit or not. So let's see. I manually move one by one. This is in inside bar and outside inside, so I wait for the breakout of here. Okay, here it broke, so I manually exit in this timing. So if I monitor chart manually, then I would exit here. And I will be fixing the profit of, let's see, 26, 27 pips. So, but if higher time frame is still going down, like I did today on the daily time frame, then I don't exit. I simply let the market hit the stop loss and take profit there, because it's still downtrending as per Ichimoku in higher time frames. So if you can remember the analogy of head and tail of the fish. So in this market scenario, in this market, as a result, this part became a head, this part became a tail, and I only took the body part. This was my body part. I took sell here again. This was my sell entry. I kept holding and exited one of the positions here. And then the other one, I fixed profit here. So yeah, again, this part was a head, or this part head, either way, it's a head and tail, and body part was this much. Okay. So when I talk about this, you may wonder if I'm missing all the pips down here. This was maybe, it's how many pips, maybe more than 30 pips or so. The head, or the tail, sorry, the tail became like 32 pips, and head was, let's see, like 17 or 16 pips. So 16 pips head I didn't take, and 32 pips of tail I didn't take. But this is okay, because again, the most important thing is not to lose. Because if you don't lose, and if you can keep winning profits like in this way, very stably, consistently, then it actually, you can be a non-losing trader. And also by losing very quickly with the small losses, like I showed on the USDJPY, then your drawdowns will be very small. And in this case, it went back, unfortunately, but if it goes down, if it went down continuously this way, then you can trial the profits along the way, and this body part will become bigger and bigger, and the head and tail pips may be the same, but the body part may become bigger and bigger, and that's usually when I take big profits, more than 100 pips along the way. So, but when we enter trade, sell, in this case, we never know how big the body is going to be. We never know. The body might be very small. It may be much smaller than head and tail, but still you take it. If there's no body, then you simply exit with a break even, because the most important part is not to lose. And then, as the market goes down towards major direction, then the body part appears. And as it goes on, the body part becomes bigger and bigger. And when simply the market goes back in the lower time frame, you exit. Is my strategy. So yeah, I built this strategy not to lose and also to be time efficient. Again, as I mentioned on the first part of this video series, time efficiency is the very key to success also. Because I don't monitor chart the whole time. It has been like 2 days. I took the trade on the 22nd of August and exited on the 23rd the next day. Almost 24 hours was that trade in this example. But I don't monitor 24 hours. It's impossible to do. I don't even monitor for hours. So after I took the sell, I monitor until I set the break-even line. So that will be here. So I took the entry. Yeah, briefly about the time efficiency. So I took the entry at 7:05 and set the break-even line at 7:55. So in this case, I monitor for 50 minutes until I set the break-even line. But I don't monitor the whole time. I use mobile, and while I'm doing something else, I monitor and check charts and see if we can set the break-even. So this part will be 50 minutes. But I check charts every 5 to 10 minutes until I set the break even. That will be maybe 30 minutes of time I monitor. And after 30 minutes of monitoring time, I set the break even. Then I leave chart, come back a few hours later, like this. Every 3 to 4 hours, I come back to chart. And when I'm sleeping, obviously I won't check charts. So when I wake up in the morning, I check charts. And then every 3 to 4 hours, I check charts. And what I check is basically the daily trend. In this example, if daily was still showing down, I don't exit. Simply I check the daily time frame is downtrending. You can actually tell in a second by Kijun-sen Kumo angles. It takes only 5 seconds to check it. If I check it, it's going down, I keep holding because I don't lose after setting the break even. I keep holding and then hoping that the market goes down. And when I come back to chart and when I happen to see the daily is flat or the 4 hour is flat, then I look for an exit timing. So let's say here, again, in terms of looking for the exit timing, let's say I come back to the chart here and I found 4 hour was flat, let's say. And then I will exit here when the market goes back. So I came back to chart at 7 a.m. UTC and decide to exit at 7:40 UTC. But again, I don't monitor the whole time. Every 5 to 10 minutes, I come back and check. So most likely, I monitor 20 minutes to look for the exit timing. So 30 minutes to look for the entry timing, and every 4 hours, 3 hours, 4 hours, I spend 5 seconds or 10 seconds maybe to see if daily is still going down or flat. And then when I decide to exit, I take another 20 minutes to spend to exit. So this is about time efficiency. We never monitor charts the whole day, the whole hours, and see how market goes. Because if you monitor every candlesticks in the 5 minute or the 1 minute even, it actually affects psychology in emotion. And you may be too focused on these tick movements of the candles, and you may have some different ideas, different exit timings, or different emotions. So the trading should be logical like this. When it's exit, then you have to exit no matter what. When it's keep holding, then you have to keep holding no matter what is very important. And you can actually do this if you build the rigid and solid strategy to follow. And that's how I created my strategy about exit timing. And again, as I mentioned on the beginning of this video, exit timing is more important than the entry, because for the entries, you don't really have emotion, but when it comes to exiting, whether it's a profit or loss, that's where emotion comes. So that's why, especially these exit timings should be based on the reasons and logics behind. So I just wanted to show you one of the examples of the exit timing here. But so on every trade, I take screenshot of the entries and exits, and I share this in GTS Discord group. But I also share this when I do the month end, every month end, I review my trades, my performance. So yeah, you can actually find my entries and more exit examples on these monthly performance videos. And if I take any entries in the future, let's say when I find a good setup in the live stream, and then I can take entry, or when I'm holding some trade and when it's a good time to exit, when I do the live stream, then I will show you exit timing in live. So this way you can learn by these practical examples, and also I can talk about my emotions when I exit the trades. So anyways, that was the topic for today about exit strategy. I hope you got this idea. I think I can just keep going and going about exit timing because this is very important topic. But in this video series, I just wanted to give you an idea of how I take trades and then exit. So yeah, I think if you at least get the rough idea of how I trade, that will be good for this video series. So 26th Friday, I will be uploading another video about the stop loss and break-even timing strategy. So please look forward to it. And between today until Friday, there will be some live streams also. So you're more than welcome to join live streams anytime when you can join and discuss markets together. So again, this PDF is you can download for free. So please click on the below description and click on the KTS link where you can download the PDF. And also I teach my strategy at the GTS class. So GTS is my hands-on training up to 5 members in the group and 3 months training course. We meet every weekend and we discuss markets and teach more practical and live examples through the GTS class. And I give you some comments on your trades also and see how you're doing, what's right and what's wrong on your entries and exits. So yeah, and also this web page is also accessible on the below link description. But not only that information, but also in this page you can find some other videos about interviews with the GTS members. So you may be able to find some members, some graduates from your region that might be interesting to listen to our conversation. And also here is where I put my monthly performance. So 2021 performance here, and the 2022 I post my performance every month. And then also down below you will see more of my live trades in the past on this YouTube channel. So please also view these videos and learn how I enter trades and exit trades. Okay, so yeah, that's it for today's video. I hope you learned something new today, and yeah, I wish you all become a non-losing trader, as I state here, because that's the most important part to be successful in trades. We can't only focus on the profits. We have to focus on the other side, how not to lose big, how not to lose is the key to success. Because if you don't lose big, then in our break-evens, then eventually you can make profits is my idea. And basically that's what I have been doing in my trades. So hopefully you learn, continuously learn based on this video series and also my YouTube channel. And hope to see you in the next one. So until I see you next time, please stay healthy and stay safe and stay gold. Alright, bye for now everyone. Mata ne. Thanks so much.